Fidelity's edge comes from being a research ecosystem, not a set of silos. We have analysts across asset classes, portfolio managers, macro specialists, and quantitative teams, all continuously pressure testing ideas together. One of our greatest advantages is that a single insight can influence multiple funds, teams, and strategies simultaneously.
Some of our colleagues have been covering sectors like energy for decades. That continuity gives us perspective others don't have. Collaboration matters because change often comes from outside your immediate coverage area.
The emergence of AI has been a major theme in energy, and it's required a team effort to understand its implications across the value chain.
Geopolitical events, like the conflict in the Middle East, also demand rapid collaboration. We looked at impacts across supply routes, liquefied natural gas markets, refining margins, shipping, and even agriculture inputs. That kind of cross-sector analysis helps us quickly assess risks and opportunities across portfolios.
Both AI and conflict in the Middle East, as noted by Kristen and Matt, highlight how connected these markets are. Our utilities and technology teams are now working side by side to model energy demand driven by AI. Our team mobilized to organize calls to collectively gain insights and rapidly assessed, analyzed, and shared these views with the entire equity team at Fidelity.
Energy is a value chain. It starts with oilfield services companies drilling wells, moves through producers, midstream operators, and refiners, and ultimately to retailers selling energy products to consumers. Every step is connected. Revenue for one part of the chain is cost for another. If you analyze any one piece in isolation, you miss critical signals that show up clearly across the financials. At Fidelity, collaboration allows us to connect those dots, and that's essential to understanding what's really driving performance. Recently, I traveled with some other analysts to Midland, Texas, visiting companies across the energy value chain, from oilfield services to oil and gas producers to midstream operators. No one person could have built that full picture alone. We published a note in our system, which was distributed widely to our diversified fund managers, and we discussed the key takeaways from the trip, including industry themes and buy and sell ideas at our morning meeting.
Energy markets are inherently interconnected. They are shaped by supply and demand, geopolitics, demographics, and technology. Analyzing that complexity requires a multidisciplinary approach. A single analyst working alone can't fully capture those dynamics, but a collaborative network can. That's how we evaluate high-conviction ideas with rigor and depth.
I have worked directly with our airline analysts to forecast jet fuel demand for our oil analysis, and with our automotive analysts to assess the impact of electric vehicles on oil demand. I've worked with our Asian energy and material analysts on changes in demand growth for key commodities, as China and India are large buyers. Lastly, in times of distress, it is helpful to work with our credit analysts to assess balance sheet and refinancing risks. Fidelity has unparalleled access based on its size, but also depth of relationship with companies. I have been covering integrated oil companies for nearly 2 decades at Fidelity and have built relationships with CEOs, oftentimes well before their current roles. These long-standing relationships directly translate in management willing to discuss key issues on short notice.
We engage with management teams through meetings in Boston, virtual calls, and in-the-field visits. When we visited the Permian Basin in Midland, Texas, we met with operators across the ecosystem. Those conversations highlighted innovations still ahead in areas like drilling efficiency and AI optimization. Importantly, we don't rely on management alone. We triangulate those insights with data, industry experts, and financial analysis to identify inflection points early.
Having strong relationships with management teams is a critical part of the investment process. We maintain regular dialogue with the companies we cover, after earnings calls, during conferences, and on-site visits. And that helps us navigate market overreactions, both positive and negative, and respond to them with conviction.